Hi everyone and welcome to episode 7 of HODL. Today we're going to discuss the Bitcoin sentiment and the strong start we have seen to 2026. First, let's start with the obvious, the Bitcoin price. Since the November low, we have seen a very good development and we are now starting to see a very actually steep recovery in the price developments. Are you optimistic when you look at the next few months?
Yeah, I think it's quite obvious now with so much geopolitical tension, and also it's less trust in the dollar, and I think 2026 is going to be a great year for Bitcoin and do what many expected Bitcoin to do in 2025. I think that will happen in 2026, and we see that with the market sentiment as well. Fear and greed index is now actually at a greed level again, and we see that Bitcoin is also going in the same direction. So I would say the market sentiment is very different, and we have some interesting months ahead of us.
Agree. So let's hope 2026 will be the year.
Yeah.
2025 was what we all hope for.
Yeah.
And what I think is more interesting is the inflows we have seen to the ETFs lately. And we have seen some inflow to the Bitcoin ETFs of $1.6 billion this year, which is incredible high numbers in my view.
Yep. No, I think we're now seeing what BlackRock and these guys are doing with ETFs and Saylor is doing with his products. We now have more structured financial product that actively can absorb all the interest in the Bitcoin, actively absorb Bitcoin interest. And ETFs is of course one of many that I think is interesting to look at, and the inflow clearly says that it's high demand now. And I think again the reason is the two reasons we come back to all the time. It's more geopolitical tension, and second, the others. Central banks are actually losing trust in the dollar, and Bitcoin is that monetary commodity that will absorb a lot of that demand when people start to researching what Bitcoin really is.
Yeah, and I also think it shows what we have touched upon in earlier episodes, that much of the fiat capital want exposure to Bitcoin through traditional products that gives Bitcoin exposure, and not everyone wants Bitcoin exposure directly.
And that's the beauty with Bitcoin as a monetary commodity, that you can, even if we now see a lot of institutional demand and structured product listed in a regulated market, nothing changed on a fundamental level. So it's still the same technology where you can buy on an exchange, you can transfer it to your wallet, either cold or hot wallet, and you can actually store that for yourself. You can have ownership of your own property. That's one use case, but for a commodity to be successful, you need multiple use cases, and I think most institutions also needs allocation to Bitcoin. So this underlying technology makes it possible for everyone in the society to benefit from it, and that's quite unique. And I actually read some of the documentations of the new Morgan Stanley trust, and one of the most interesting thing there is that they use a third-party custodian, and they actually allow for in-kind redemption, meaning that you can buy it with your fiat money into the regulated system through your broker, but if you want it out, to be clear, I'm not saying it's your Bitcoin, but you have the opportunity, if everything works out, to take out that Bitcoin to your own wallet. So it doesn't need to go, you can actually onboard through fiat and exit through Bitcoin, which is actually a quite cool feature that we haven't seen many other examples. That's also true for IBIT.
Yeah.
And you can do in-kind both ways, so in and out. So I think Bitcoin opens up for these new functionalities that finance hasn't seen before, and I think that natural will be the same requirement you will get for other securities in the future.
Yeah, and it's really cool to see that the banks are using a lot of efforts to navigate the law they have to apply to find ways to create Bitcoin products.
Yeah.
which I think is really cool.
And we already see it. It's a little side note. I was in London now for a few days, and one of the things a lot of these institutions was looking at was tokenization. And for me, I was a little bit like surprised because tokenization doesn't have much liquidity. So what's the reason why? And if you look to tokenized money market funds, with tokenization you can actually get your interest rates from the second you invest. But in the bank system it can be delays. So if you manage like hundreds of billions, you want that to count from the first second you allocate, not if it goes a bank day or. So it's quite interesting to see that the mindset of Bitcoin and the reason why we think Bitcoin is good also starts to go into the minds of institutional capital.
And I think in Q4 last year, we saw that the Bitcoin treasury companies was correlating a lot with Bitcoin and actually underperforming Bitcoin. And we touched upon earlier that leveraged Bitcoin plays tends to underperform in bad markets and overperform in good markets. And I think this year we have seen a rebound in the stock prices of the Bitcoin treasury companies, and the top companies in the world are performing really well the last month.
Again, we did our own internal study looking into other commodity industries and other commodity companies, and what we found was that they correlate both ways with the underlying commodity price. And the other conclusion is that they outperform in good markets, they underperform in bad markets. But I also think that Q4 gave the investor enough insights to understand that this is not going away. It's not a short-term thing. And some sold Bitcoin to cover their cost and had bad debt structure. But I think Q4 revealed who had properly managed their treasury and cash balance. You can argue that some was more active in the market than others, but at least the market now know how they actually manage these companies also in a short-term bear market.
Yeah, and one thing we should talk about is the incredible credit products of Strategy. It's very innovative, and it's actually changing how you look at credit. We have never seen such a efficient way to raise credit in finance history as I'm aware of. And I know you have some thoughts and used a lot of time on thinking on digital credit and Bitcoin credit.
Yeah, I think the mega trend of 2026 will be this credit instrument and really use Bitcoin as collateral for issuing new product. And I think what Michael Saylor has done, which is just incredible, is he has distribution, he lists this product, he give it a name, and he gets so much volume that he can trigger the ATM and actually actively raise capital in the market, which is an insanely efficient way of doing it. And I think over time this is incredibly valuable for their shareholders. And I think every Bitcoin treasury company needs to be inspired by that. I think we are now, we talked about it earlier, I don't know how much interest it will be in illiquid products going forward. It's just a generational shift, and especially with examples like Michael Saylor in the market, seeing so much money being absorbed into like 5, 7, 12-year lockup period, I don't think we will see that much demand. I think we are now moving more from illiquid to liquid, and we go distribution first, like Michael Saylor has showed us. And again, he can raise like thousands of Bitcoin on a weekly basis, and it doesn't impact the price. And that's truly impressive. And I think that's where we will see much more innovation going forward, and each Bitcoin treasury company will have to decide how they want to play that. And then the question is, when we already have this instrument in dollars, will we see it in euro, and how will we see these instruments being developed? Because right now we don't have these huge balance sheets of Bitcoin in Europe, like Saylor, but also like top 10 is mostly European and Japanese companies.
And then I think a very good news for us was that MSCI released a press release that they wouldn't exclude digital asset companies from their indexes, and we are included in one of them. I think it's great news for us. It's great news for every player in the industry, and it's good to see that they are taking this seriously and actually saying that they will do a thorough review to look at how you should treat these companies, which I think is good for the whole industry.
Yeah, and again, you will see multiple phases of this industry and multiple business models on how to achieve the main KPI, which is increasing Bitcoin per share over time. Michael Saylor has his model, but I'm super convinced that we will see multiple other models as well. So I think what they now realize is that yes, they hold a lot of Bitcoin on the balance sheet, but it will be a strategic asset for their business model going forward. So it's a little bit hard to say that they are not operational, because what Saylor is doing is highly operational. It's all about marketing, it's about distribution, it's about building trust. It's so many things he has to do on an operational level to be able to issue his credit instruments. So you can't say that these are passive vehicles. And we just saw in 2025, most people did the equity flywheel. Saylor did the credit. Now the rest of the industry is following with credit. So it's so much active management here, and you will see different strategies and different methods to accomplish the main KPI, even if you say that most of the balance sheet is Bitcoin.
Absolutely. And I think another good news we have seen is that Morgan Stanley has filed to launch a Bitcoin ETF. I guess they have looked at their competitor in BlackRock, which has been hugely successful with the ETF. And that's also very good news for the Bitcoin industry, because we are huge believers that we need traditional products that fits within traditional mandates to give exposure to Bitcoin. And it isn't a either or if you discuss owning Bitcoin directly or through a ETF or similar instrument. So everything is, every new product is supporting the whole Bitcoin ecosystem.
Yeah, I think this is great because first of all, when these companies are creating product, it's basically given whole industry called financial advisors a new set of products that they can offer their clients. And I think it's a great thing to see these banks trying to innovate. I think it's good for the industry because I don't think they focus enough on it either. I think they do it as a need. They do it because they has to, and I think that's the same discussion now with stablecoin and all these kind of things. It's not because they want, it's because they need. And but it's also a huge challenge on their organization because most of their business model needs to change. So I think this signals that Bitcoin treasury companies had this first phase with Bitcoin native capital, but with this Morgan Stanley and BlackRock and all this coming into the market, now it starts to be more institutional accepted to do other bets as well, and that's onboard fiat capital into the Bitcoin treasury space. So all these institutional products helps this industry, and we all work for the Bitcoin industry with different methods and different strategies. And I think all adoption, everyone that puts Bitcoin on the balance sheet, every individual that buy Bitcoin or try out something with Bitcoin, or even banks playing with Bitcoin, is good for the broader ecosystem.
Yeah, and I think it's under-communicated that the banks are actually, let's call it almost a marketing department for Bitcoin, because Bitcoin can't market itself. So we need all the salespeople and all the marketing people in the banks to really talk about Bitcoin and sell it to their customers.
Yeah, and that's the big difference between Bitcoin and all the other coins, because if you can print coins or money, you can also spend part of that budget on marketing. Bitcoin doesn't have that, and therefore also are less marketed and grew more organically, and the distribution layer will be put on top of Bitcoin and to create business model that incentivize people to sell the true real commodity and not a printed, inflated reward system. So, and for us as well, like last week we announced that we signed an LOI with Future, the Swiss Bitcoin treasury company. And what we liked with that was how institutional they are and how they think how to onboard institutional capital to this industry. So I think this is a mega trend going forward. And it's also definitely something for H100 to look very, very deeply into.
Absolutely. So I think we can end this week's episode with saying that we are hugely optimistic on 2026. We love to see that the sentiment in Bitcoin has picked up, and we love and are very supportive to see that the banks are introducing new products and are talking more and more about Bitcoin. So thank you so much for watching today, and have a good week.